Mic check. Mic check. Okay. We are good to go. I don't believe you're okay. Yes, sir. I was having trouble with the connection, but I do believe you're okay. I don't need this. I don't believe I need that. So we are going to anticipate CPI in the next few. Mic check 1, 2. It's currently 3:10 p.m. UTC plus 3, and we are about to anticipate CPI in the next few minutes. So I want to share my entire screen. Let me put my phone on D&D because this is the point whereby you don't want any disturbances. This is whereby you lock in. Any small mistake could prove to be very, 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 very costly, and we don't want to be in such a situation. I'm going to start with I'm going to start here. Just a moment. Okay, okay. This is where we're going to begin now. Today is April 10th, 2025. Let's just start from the top going to the bottom. We did have CPI for China coming out today, and we are going to explain more about this. Why is this important for us right now while we are supposed to be looking at the United States dollar? Currently, there's a lot of trade wars that is happening. It's a fight between China and the United States of America, whereby it's a tug of war essentially, and no one wants to be the underdog. Everyone wants to be on top of the other person. Now, why CPI? Why is it important to be looking at this data currently at this moment in time? Now, CPI is all about inflation. Last week we received employment numbers, of which it did come out better than we had forecasted. Now, remember this is April. Huh? Let me just pull up my calendar here. So this is going to be March data. This is going to be the data for March, but it's very important for us because we want to look at this data, ask ourselves, okay, where are we headed to in the near future? While I'm looking at this data, the most important thing is I want to know where is inflation headed to? How do you look at this data? Now, we are going to have, let's say, three major news releases coming out at this time. Now, the first one is going to be core CPI. The other one is going to be CPI. We do have CPI for the year. Now, investors, long-term people want to look at the year-on-year release numbers, but it's very crucial for us to be looking also at the month-on-month release numbers. We are going to anticipate unemployment claims coming out also at the same time. We are going to discuss about this. Now, starting us off with core CPI. Now, core CPI is the change in prices of goods and services purchased by consumers, but this one excludes food and energy because they are very volatile. Now, the usual effect is actual greater than forecast is good for currency. Released monthly about 16 days after the month ends. Why do traders care? Consumer prices account for a majority of inflation. Inflation is important to currency valuation because rising prices lead the central bank. And this is why we are here. Because this data also, the central bank, the Fed Reserve are going to look at this data, ask themselves, okay, should we be lowering rates? Should we be increasing rates? What should we be doing as the Fed Reserve? So this is a very, very, very crucial data for the Fed to be looking at. Now, the first one is going to be excluding food and energy. Why does it exclude? Because food and energy are very, very volatile, and they usually categorize it. Now, there are two data. There are two types of data here. The core excludes food and energy. Now, the CPI itself is going to include food and energy. Now, if you look at the two differences here, we do anticipate the core CPI rising, but we want to see the forecast of the CPI itself lowering down. If you look at what Trump did with eggs the other day, whereby by January 25th, the prices of eggs were nearly $6.5. Right now, eggs are retailing at nearly $3, which is quite significant. Huh? Now, this is the reason why we have these two sets of data because we want to categorize, okay, food and energy, we want to separate because sometimes it can distort the underlying trend that we are supposed to see in inflation. Because in the United States, on during Joe Biden's term, there was this issue. Uh, uh, there was a disease that was, I do believe it was smallpox, whereby it was really harming the egg industry. Now, Trump has a, let's say, for example, if a disease comes into place and then tomatoes go rotten in the whole country. Now, if that data comes out, it might print a different impression from what is there because these are part of what we do anticipate in the financial markets. The markets are all about trends. Sometimes, especially when you're looking at food and energy, like what we saw last year in terms of energy, the Middle East, the tensions, we did see oil picking up drastically, and that can also bring an effect to inflation. So usually we want to see what these two sets of data are going to mean to us. But for me personally, I want to look at the year on year release. If you look at the forecast of ever since July 2022, we have been on a downtrend from peaking at 9.1%, and inflation has rallied to the downside over the past few trading months. Now, the last month's data was at 2.9. Central banks want this data to be at least below 2%. That's what the central bank would want to see currently at the moment, whereby we want to see this data at least going below 2%, whereby it would impact the Fed Reserve to lower their interest rates. Now, the next meeting is going to be in the next 27 days, 5 hours, 43 minutes, and we want to see, will this data enable the Fed to lower interest rates? As you see right now, the current rate is at between 425 and 450 basis points. But the most important thing, one thing I want you to pay attention to is a few weeks ago, we had this probability of between 400 and 425% being at 3%. So over nearly 2 weeks, this forecast has jumped from 3% to nearly 20.5%, which is quite the uptick in terms of could we be seeing lower rates in the near future? So this is as of 7th May 2025. This is the probability whereby there's a 79.5% chance that the Fed are going to hold the interest rates where they are currently at the moment. But if this data comes out differently, could the Fed be into lowering rates earlier than we had initially anticipated? Now, also unemployment claims is something that we want to look out for, whereby we have seen unemployment, okay, ever since 2024, unemployment claims has been on the downwards trajectory. Now, this is what we'll want to see, whereby people are losing jobs less frequently. Now, when you look at unemployment, this is how many people filed for unemployment insurance for the first time during the previous week. As you can see, the data ever since December 19th, we have seen quite the significant amount of people retaining jobs. The only times we had red was January 16th, whereby it was only a difference of 7,000. February 6th, it was only a difference of like 5,000, and so on and so forth. But this is the trajectory that we want to see. And when you look at Fed speeches, usually employment is at the top even before inflation because everything is directly tied to employment. If people have jobs, it means the economy will do well. People will pay taxes, they're going, money will be in circulation. But if people are losing jobs at an alarming rate, then that means, okay, we need to look into something. So currently at the moment, we want to see these numbers at least. I don't want to be speculative because with news, no one knows what's going to happen next. Huh? No one knows absolutely what's going to happen next. But we are headed in the right trajectory. Technically speaking, fundamental sentiment analysis. Yesterday, Trump came out and initially, and this is in my past video, there was someone by the name Walter Bloomberg, whereby he did post that Trump is going to post tariffs in the for the next 90 days. At first, we thought it was a hoax. At first, we thought that okay, maybe it's not real accurate data, but yesterday, the White House confirmed that yes, indeed, they're going to pause the interest rates. Not interest rates, sorry, but they're going to pause their tariffs over the next few days. Now, if you look at stocks today, this is the daily change. This is the S&P 500. Things are booming ever since yesterday. This is the yesterday was actually one of the most violent days we have seen. For Nasdaq, it's been ever since 2001. We have never seen such a move within a very short amount of time. If you look at Microsoft today, we are up 10%, Google 9%, Meta 14%. Tesla is one of the biggest gainers at 22.69% of the day, meaning, okay, the markets are perceiving this information positively. If you look, this is the S&P 500. If you go to the Nasdaq, the same thing can be said. Where's the Nasdaq? Nasdaq here, Apple up, Nvidia up. Most of the things are currently doing well for the day. For the day, we are starting to recover what was happening ever since Liberation Day. Now, the markets are asking ourselves, we're asking ourselves, if you look at the Russell, the Russell has one of the biggest gains. Look at this, most of the stocks in the Russell, these are middle cap stocks, okay? These are not high cap stocks. But if you look at these stocks currently, most of them they're in the greens compared to what was happening a few days ago, which was very, very terrible. If you look at the data, US stocks futures edged high on Thursday after the major averages posted historic rally as President Donald Trump announced a 90-day pause on many tariffs, except keyword being except China. In regular trading on Wednesday, the Dow and S&P 500 jumped 7.8% and 9.52 respectively for their biggest one-day gains in 5 years. For the Nasdaq, I do believe it's since 2001. The Nasdaq surged 12.6. Yes, for its best single-day performance since 2001. I had only a few months on my name. Few years, so to say. Those gains came as Trump offered a 90-day reprieve on his reciprocal tariffs for countries that are not retaliated. Still, Trump continued to escalate the trade war with China by raising their tariffs to a record 125%. As of yesterday, we were looking at 104%, but currently it's looking at 125%. While measures on the EU are unlikely to be paused, because of Brussels' retaliation announcement. Mega cap technology names led the advance, blah, 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 yada, yada. What does this mean? We want to go to the charts. This is where it's very crucial. Now, ever since Monday, this was Monday, Tuesday, Wednesday, Thursday. This is a very good pattern that I've been looking at currently, and I've been sharing it with a few individuals whereby I would want them also to practice this out. Look at if it works. But yesterday was very interesting because we saw gold gaining. The last time I saw gold moving 1200 pips a day, I do believe it was Russia Ukraine. Yeah, I do believe it was Russia Ukraine. That was a while back. Seeing gold move 1,000 pips a day, and then I was like, God damn, I'm glad to be alive because this is the time to get this is the time to learn about forex because in 1,000 pips you can make a lot of money. You don't need to get those 1,200 pips, but you can make quite the significant amount of money while you're trading these financial markets. Now, looking at today, price action, I don't want to be speculative currently at the moment. I want to wait for the data to come out, but I'm going to show you a very simple strategy that I personally use when I'm looking at opportunities. I'll be analyzing that using MetaTrader. But currently looking at gold is a recovering. We saw at least, was it 5% yesterday? This was nearly 4.22%. So we have recovered more than 5% of what happened on Friday last week, which was very, very dangerous. I lost quite the amount of money trading last week, but I'm on the trajectory to recovering. And that's all about what Forex is, whereby high highs, high lows. You never know what's going to happen next. The only way is to find out what's going to happen next. But gold, is there a likelihood we are going to tap into 3,168 in the next few trading sessions? I don't know. I don't know. I'm not that certain, depending on what the data is going to look at. Currently, I would want to see that this market coming to retrace back down a bit to the magical 61, between the 50% and the 61. We do have less than 6 minutes to go. I want to see prices coming back at least down for a further push to the upper side. But currently, we are very bullish on gold. Looking at S&P 500, we are correcting the move that happened yesterday. I remember seeing these, and I was like, in less than 3 minutes, the S&P 500 moved more than 7%. I've never seen such a thing happen on gold. Yes, on other assets, never. Never have I seen such a move happen. And is there possibilities that we might be going further to the upper side? The S&P 500 is a good asset to be looking at because it shows you the top 500 companies, what is going to be happening generally. The S&P 500 is what is happening in America. When you look at the Nasdaq almost the same thing happening currently at the moment. And New York is going to prove very, very crucial. New York Open is going to prove very crucial in the next few trading minutes. US 30, we are retracing currently at the moment. The Russell retracing at the moment. Treasuries, we have seen an uptick in the 20-year treasuries. And this is very interesting to note out, whereby, yeah, could there be more than what's happening? Could investors have regained their confidence? Brent oil has recovered. I remember doing this analysis yesterday, whereby we were like, it's very unprofitable for people to be selling oil if oil is trading at $60 a barrel. Very unprofitable. But if you look at what's happening currently at the moment, we are correcting that move to the downside, whereby oil, I do believe it gained more than how many percent in just these few trading sessions. This was more than 10%. The dollar index currently at the moment, this was a very good trade that we had taken, analyzed with you. Very nice, very nice. The dollar index is weak. So what does this mean? What does this mean for gold? This means a weaker dollar. Only one way to find out. We do have less than 4 minutes. I want to be very, very quick on my analysis. Now, the volatility index currently at the moment is at 37%, 37.4, meaning there's a 37% chance the market can move either way. But looking at Bitcoin yesterday, as other assets did gain, and this is something to note out, whereby is this positively correlated to the United States dollar? I do believe it is. I'm not going to look into currencies, but after the news release, we are going to be looking at that in the next few. So let me show you my strategy, how I trade news. And I'm going to do this with you. So for my charts, I usually like, whenever I analyze charts, I usually have these session breaks. Whenever I'm trading news, I like to have it at the 1 hour time frame. Now, I like using buy limits and sell limits. That's ideally what I like to do. But for today, let me do this. Where's Forex Factory? So we have 2 minutes, 38 seconds. Usually what I like to do is I have buy limits. So what I'll do is let me mark it out on my chart. This is what I'm going to anticipate. I'm going to go with a buy limit at 30.71. That's like 500 pips away. Quite significant, but I don't believe so. Let me enter this position. So I like analyzing using my PC and then execute using my device. So for those who are interested, let me record it. I'll send it to you. So it's going to be, let me, so a buy limit at 3071.3. Okay. So we do have less than how many seconds? Less than 27 seconds. So this is going to be the execution. I'm going to have a buy limit just below this region, waiting for prices to come back to those lows. So let me take a screenshot of this, download image, very nice, and then go back to Forex Factory. Let's see what's going to happen. So this is whereby if you are a faithful person, if you believe God exists, this is the time to make contact, because it reaches a point whereby you do everything, but you leave it. There's nothing more you can do. No one knows what's going to happen next. Pending. This was weak. This is weak. So the data has come out negative. Okay. Very negative. So CPI on the monthly has come out at negative 0.1. Now that's the CPI itself. Huh? Core CPI. I want to look at the year-on-year release. The year-on-year. So CPI has come out negative, meaning gold will continue buying. But the question is, should we start chasing prices right now? I don't believe so. Or we could enter a small position where price is currently at the moment. But the problem is, where are we going to have our stop loss? Okay, this was weak, but this is good. Inflation is coming down for the year at 2.4%, meaning the Fed Reserve might start lowering their interest rates. Let's see what the CME has updated. Whoa. So you can see the values are changing. Huh? The values have changed. We were looking at 20% right now. There's a high likelihood we are going to hold the interest rates where they are currently at the moment. You can see we were looking at anywhere between 20%. Right now, the forecast has gone down, meaning the Fed, there's a very high possibility that they're going to hold their interest rates by 7th. Now, this is data as of 7th, which is going to be in the next 27 days. But looking at, gold will go down first, then go up. That's what I'm looking at. There's a very high possibility that we might go slightly to the downside, then move to the upper side. But if you look at 18th June, what are we anticipating? A 62% chance. Now, okay, this one is starting to increase, whereby the Fed will be enticed to lower rates just before the year does end, when we don't know when. But let's look at the CPI. I do believe the data has been updated. Let's see. Here you are. So unemployment has come out at 223,000, which is what the forecast was. Let's start with unemployment first before we, okay, this one hasn't been released yet. CPI, okay. So this is the whole data that has just been released currently. You don't have to go through everything, but as you can see, the consumer price index for all urban consumers increased 0.2% on a seasonally adjusted basis in February after rising 0.5% in January. The US Bureau, blah, 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 reported today over the last 12 months, the all items index increased 2.8% before seasonal adjustments. The index for shelter rose Shelter did rise, accounting for nearly half of the monthly all items increase. Okay, so the housing is something to be looking at, and I'll show you a very interesting piece of information that you can be looking at to gauge where the real estate market, how basically the housing market, where it's headed to in the United States of America. Accounting for nearly half of the monthly all item increase. The shelter increase was partially offset by a 4% decrease in the index for airline fares and 1% decline for the index for gasoline. Despite the decrease in the gasoline index, the energy index rose 0.2% over the month as the indexes for electricity and natural gas increased. The index for food also increased in February, rising 0.2% as for the index away from home increased 0.4%. Now, this is the whole data. So when you're looking at CPI, someone could be asking themselves, like, what's CPI? This is CPI. CPI looks at everything, looks at motor oil, meat, eggs, dairy, fruits, anything that can be purchased by a consumer, anything that deals with the consumer, even rice, even biscuits. So this is the whole data that was released at this particular moment in time, and the Fed Reserve are going to look at this data. I want to look at eggs. What happened to eggs? Where is eggs? Because that was something Trump was very proud of previously. Where is eggs? I'll find for egg. Oh, here it is. So here it is. Whereby, okay, we've been, okay, this is very interesting. This is really interesting. If you look at the data now, this was January 2025, February unadjusted, then this is seasonally adjusted. Now you want to look at the previous data and the current data. So if you look at eggs, where were you, darling? Let's look at the season. No, let's look at the seasonally adjusted. Between December 2024 and January 2025, and January 2025 and February 2025. Okay, it has seen an uptick. It has seen an uptick, but the prices of eggs in the United States currently at the moment, it's doing relatively good than what it was initially. If you look at, so okay, so seasonally adjusted, it has gone down, but if you look at the data itself, this was trading at 12.5. Currently, it's at 0.7, which is quite significant between January 2025 and February 20. No, we are looking to the first column and then the second column interested. So it was 5.9, but currently it's at 1.0, which is very good. Which is very good. As you can see, this was something Trump was very proud of while he was that was during Liberation Day. But currently, um, unemployment, is the data out? Yes, sir, it is out. So this is a weekly data. It's lagging, but it's worth looking at, because if someone loses a job today, you're not going to go broke tomorrow. What do you mean? Seasonally adjusted data in the week ending April 5th, the advance figure for seasonally adjusted initial claims was 223,000, an increase of 4K from the previous weeks, and revised 219,000. So if you look at unemployment, we are headed in the right direction. We are headed in the right direction. If I was to look at the graph of unemployment, yeah, things are good. Things are good. People are retaining jobs in the United States of America. That's very good. If you look at the data this year, we just had one uptick. That was February 27th. What happened during February? There was something that happened. Was it a fire? I do believe it was a fire. It was a fire in Cali. I do believe it was Cali, California. So we had this uptick at 241,000. But currently at the moment, we are beating focused, which is very good. If you look at the revisions are not far from the actual numbers itself. This one actually hit the T to the forecast, whereby people are retaining jobs in the United States for the past 1, 2, 3, 4, 5 weeks. People have been retaining their jobs. And we want to see in the next Fed meeting, which is going to be in the next 27 days, because that's where all eyes are going to be. But currently, looking at price action, this is something we have noticed. I remember when we started trading, CPI was something dangerous to be looking at. It was really, really dangerous to be looking at CPI. But nowadays, volatility usually comes in after, of which markets are changing. The markets are very dynamic, but I'll be looking for some short selling opportunities, maybe to these lows, to the daily lows. If we don't come back to 3071, I'll have a martingale strategy on this, a very cautious martingale strategy on this. But I want to wait for the markets to come back to at least 3071, have my pending orders there, 3071 and 3050. 200 pips apart, that's very doable for gold for a further push to the upper side. Currently, at the moment, I wouldn't want to buy. Yes, the data has come out negative for the United States dollar. Yes. For people who don't know how to trade news, it doesn't mean you need to be buying right now. That's how people lose money. This is how people lose money, whereby it's come red, 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 we need to be buying. No, no, no. It doesn't happen that way. That's how people lose money in the financial markets. Usually wait for the markets to come to you. Currently, at the moment, my entry is it's quite far. Honestly, this is how many pips? This is like 600 pips. But gold can do that in a day. You never know. Tomorrow is Friday, meaning this weekly candlestick. If I was to look at this price action, if I was to look at this price action currently, the weekly candlestick has only 1 day, 9 hours to go. So I don't want to make rash decisions right now because it's very easy losing your account as a result of chasing the market. But if I was a trader looking for an opportunity today, I would want to see a selling possibility on gold for the short time. For the short time. In the shorter time frames, I want to see prices coming back down here. I'll be very interested executing between the Fibonacci golden ratio. Now, looking at US 500, let's look at other assets. Very silent. Now, this is good because it means that the majority of the activity is about to come out later. US 30. Right now, the markets are more sentimental than fundamental, whereby even inflation numbers don't seem to push prices. But this is good to note. Treasuries have picked up. So the 20-year treasury has picked up today, which is very, very interesting ever since the market opened today. That's very cautious. That's really good to be looking at. Brent oil, not a lot of activity. WTI, almost there. Dollar index. The dollar index is continuing to tank, which is yeesh, which is very dangerous. Volatility index still at nearly, when we started the stream, it was at 37, currently trading at 36.49. BTC USD still there. Now, this is very good. USD Chinese yuan. Okay, so USD Chinese yuan is the Chinese yuan is gaining strength, kidogo. Now, this is I want to speak about the Chinese yuan for a bit. The reason why we have this trade wars going on is because China are producing a lot of goods. And if you look at data today, the inflation data has actually came out today at 4:30 a.m. UTC plus 3. They are in deflation. Okay? And I want to be very demonstrative about this. Let's say China produces vehicles. Okay? They produce really good vehicles. They produce a lot of goods. If the Chinese yuan is weaker, it means their exports are going to be cheaper. If you're going to buy from China, basically you're going to need less Chinese yuans to buy a product from them. Now, Trump is very against this because it affects their markets, because people will be like, let's go to China, we are going to get goods much cheaper. For them, it's good. And there was this document that was launched in January. It was called the Strategic Action Plan, China. And if you look at this document, it was the People's Bank of China had this planned out all along, whereby the plan was devised by the Ministry of Commerce. This is part of the Central Bank of China. Among the measures, the plan will encourage foreign companies to make equity investment in China and guide high quality foreign capital towards long-term investment in China's publicly listed companies. China will allow foreign investment companies to utilize Now, this was something that the United States was very against. China will allow foreign investment companies to utilize domestic loans for equity investment by removing restrictions, encourage multinational corporations. Now, if the People's Bank of China lowers their rates, it means they're encouraging people to go to China to take out loans from China. If you, let's say, for example, what's the interest rates for China right now? At 3.1%, which was lowered over the past few trading months. It has been lowered, meaning they're encouraging people, come, we'll give you loans, we'll give you our money, you buy goods from us, tutaona venye tutalipana baadaye. And this is very dangerous because it affects people in the Western countries. They don't want this because if you look at trade distribution back in 2000, I was looking at that and I do believe I'll find that picture. In 2000, China was relatively small. If you look at this historical data, so this is USD Chinese yuan. Huh? If you go to, let's go to the 3 month time frame. Back in the early 2000s, late early 2000s, we did have this uptick. This was during the dot-com era, but prices did fluctuate. But after 2005, look at what happened. The US dollar lost against to the Chinese yuan nearly 26%. This was very alarming. This was whereby China announced itself to the world, whereby we are here. We are here. You can look at this. Ever since 2005 to 2013, the Chinese were very dominant against the United States dollar. Most of the things are with the BRICS. BRICS right now it's going to take a hold because of the tariffs and all that. Basically, they want to shake partners of China, whereby they're discouraging other people to be trading with China. It makes sense. It does make sense because at the end of the day, governments are businesses, and every government would want to be profitable, so to say. When you look at the United States, they want to sell Teslas to their own people, but they can't sell Teslas to their own people because China is producing cheaper electric vehicles compared to them. And it's going to be a war, it's going to be a battle that's going to continue between China and US. China have accumulated a lot of gold in the past 16, currently it's 20 months running. Over the past 20 months, if we saw gold, if you go to a chart of gold, ever since inflation hit back in late 2022, it was September 20, yeah, around this region here. This was when inflation started hitting. The moment inflation started hitting the United States of America back in October, November 2022, China started accumulating vast amounts of gold. I remember looking at these price actions, we were trading, we didn't know what was happening, but documents came out later whereby the People's Bank of China, especially Shanghai Gold Exchange, were buying gold in huge amounts. By huge amounts, I mean huge amounts. And at the same time, China was offloading a lot of US treasuries and US bonds. If you look at ever since 2022, ever since gold started tanking around this region here, it started way earlier back in 2020 during COVID times, but the most amount of we have seen being offloaded was that period whereby inflation started hitting in the United States starting back in 2021 December. This was after COVID, recovery of COVID, whereby China used to have a lot of US treasuries and bonds. They started offloading those bonds. If you look at this, we have been seeing the United States has not been. Yes, it's still the reserve currency of the whole world, but currently at the moment, it's being threatened. And this is why we are seeing these back and forths with top officials. China yesterday, was it today morning or yesterday? they did decide to impact 84% tariffs on goods from the United States. And if you look at Trump and his whole strategy with the tariffs, it was never about other countries. When you look at Africa, Africa was like Kenya. Kenya, we were hit with the baseline 10%, and we don't have any part in this. We don't have any part in this, but there's a Swahili saying when two bulls are fighting, the grass usually gets hurt the most. And right now we are looking at these charts, and we can see that yes, it's a battle between the United States dollar and the Chinese government. So gold is still there. This was one of the weakest CPI in my trading history, and it makes sense because the markets currently at the moment are more sentimental compared to fundamentals. But if it was a while back, if you look at CPI, previous CPI releases, if you can go back in time, it was very, very violent, very violent. I remember I started trading when CPI was coming out. If I can go to the charts, I can actually pinpoint when I started trading, and it was back. It was CPI release. I remember that day like the back in 2013. Where are you? I don't believe it was around this region, August, somewhere around August there. The CPI for August 2020. I started trading around this period here. This was when I started trading. It was this candlestick here. I don't remember. I do believe it was this particular candlestick. And if you go back in time, 16th March 2020. If you can go back in time, 16th March. It was around this time. I do believe it was around this time here. And as you can see, we've never had these massive. Yeah, I do believe. Yeah, it was around this region here, whereby we saw these numbers. And on that particular day, it was very violent. So at the moment, gold is just playing around 31.30. So I'm looking at this price action and I'm asking myself, could there could the train be leaving without us? When I'm looking at the daily candlestick, it has 8 hours to go. Now I'm asking myself, what are the possibilities that 3071 is very unlikely? Okay, right now it's looking unlikely because it will take something to get prices back down here, and the data has come out negatively. So this is whereby patience is a virtue. This is whereby patience is going to be a virtue. Sitting on your hands is going to enable you to retain the money that you have right now. Yeah, so I think I'm going to call it a day. I'm going to leave my pending orders. If it wants to execute, it does execute. But currently, I'm thinking of entering a small sell position. But the likelihood of that happening, I don't. Let me just wait it out. Let me wait for price. If it doesn't come back to this region, well and good. But if we do stay around this region up to tomorrow, I would want to get at least selling opportunities for prices coming back down to at least 3070. I don't believe that is going to be a very high likelihood scenario that I'm going to be looking at currently at the moment. That's going to be it. Thank you. Stay safe. Use a stop loss if you're going to be executing in the financial markets. Your capital preservation, not trading, is actually trading. Okay. Not trading is actually trading. Stay safe. Take care of your accounts. I will see you in the next session.